Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well, yesterday's price action, especially compared to the Monday, was really huge, solid. So you can see on yesterday's trading session, market has formed some sort of the high wave candlestick pattern that usually indicates as indecision condition. And in general, that agrees with total price action in the recent couple of weeks. So you can see market stands in the consolidation that we previously have called as pennant pattern on the daily time frame. Yesterday we have said that probably if market will give us the stop grabber pattern, the bullish side, that will be a good hint on the potential move to the upside to the 134.30 area at minimum. And yesterday, in fact, we have got it. So you can see by this shadow, market has shown first the further breakout of this pennant and the stop grabber pattern. But if we will take a look on the intraday charts and we will see how it has happened, so it was not very impressive. And in fact, the way how market has behaved yesterday looks a bit too choppy and sloppy price action to talk about the potential, I would say, if we could call it, bullish development of the market. Because in fact market stays in the range and doesn't show any attempt or solid thrusting move in any direction, so it just continued to calling inside of this pennant pattern. How we could build our trading plan in current environment? Well, I see only two possible scenarios how it could be done. First of all, you could stick with this stop grabber pattern. So this pattern will be valid until market will not erase the low of this candle, that is 132.66. That is the low with the stop grabber. If market will turn to the downside, will shift trend to the bearish side and take out this low, well, probably we could say that stop grabber has failed and we should be ready for downward continuation. What is also significant is that this low stands very close to that low. It's 132.56, just a 10 pips difference between these two lows. And if market will take this low, it will destroy absolutely the potential of the butterfly pattern that we have discussed yesterday, although this pattern currently looks a bit ugly, mostly due to yesterday's trading session. Another moment is to wait the breakout of this pennant. The truth breakout, if this breakout will be to the downside, then it will be not quite in a row with bullish behavior and the bullish nature of this pattern, and that probably will tell us that we should search for the possibility to enter short. With upward breakout, well, if it will happen, then it could be a bit late to enter on the long side of the market, because around 134.30 area, significant area of resistance, we could see some sort of the washing rings of previous tops and retracement to the downside. Because if you're bullish, it's probably better try to search the possibility to enter somewhere inside of the range of this stop grabber pattern, because your stop will be not so significant. It's about 50 pips, maybe a bit more, but looking at the risk-reward ratio, it also will be not very impressive, because market almost stand slightly lower than the middle of the range between the 132.56 and 134.30. So that's a decision that you will have to make. Probably to stay flat also is not a bad idea, because when the market stands in some sort of the indecision and very choppy price action, sometimes it's better to step aside and wait when this period will over. So on the 4-hour time frame, we see our butterfly. That's now the right wing of it looks a bit not very perfect, if we could say that. Take a look at the price action. Yesterday we said that if market will returns right back inside of this range, then it will be probably not the good behavior for the bulls, and that really is. It makes market to look heavy. because it can't jump up, it can't continue move to the upside with this solid thrust to the upside. Okay, but still this low still holds, and some hope, some perspective of the bullish move still exists. Recent price action and behavior with the MACD indicator shows that probably we could get the stop grabber, bearish stop grabbers are forming in this area. So you can see market that feels pressure and can't move to the upside. So I can't exclude the possibility to continuation move to the downside. That's why waiting for the breakout of your bearish, it looks more reasonable, because you will have more confidence to enter short if market will take out this low and probably will erase the butterfly. In this case, the road to the downside will be open, and that will be a bit, I suppose, safer to enter on the short side of the market. But if you're ready to take some risk, that's probably you could try to use these patterns as well to possess yourself on the short side of the market if you have the bearish view. The one problem here is where you place your stop. Very difficult to estimate where it could be placed, because until market stands inside of this pennant is potentially bullish pattern, and to enter short right inside of it, well, it's some sort of the gambling that because you are making the bet on the bearish breakout of the bullish pattern. Well, probably it's better to wait some more solid signs of the bearish reversal, and that the bears are taking the control of the market. On another 4-hour time frame, I would like to show this pennant with the more details. So you can see this triangle now is forming, and take a look. It is based on, it's found on the previous consolidation of the previous top. So you can see this rectangle that has been formed in December, and now market shows the pennant that looks like holds above it. So that consolidation, that support area holds the pennant. So pennant has the foundation from this, if you could call it, a rectangle. Well, that being said, in general, I do not see any significant patterns except maybe the daily stop grabber pattern. On the hourly time frame, situation is not much better, since there are also very choppy price action with no patterns, and probably we will get some solution of the long-term perspective when the market will exit from this pennant pattern. So if you have the bullish view, you could try to stick with the daily stop grabber, because this is still the pattern. With this pattern, you clearly understand where your stop, where is the target. So if this will acceptable to you, well, probably you could try to use it, because potentially we have the bullish pattern trend still holds bullish on the daily time frame, although market now is doing an attempt to shift it on the bearish side. Well, but until that will happen, trend still holds bullish on the daily time frame. Well, if you are bearish, I suppose that it's better to wait for breakout of this pennant to the downside. That will be just safer to enter on the short side of the market. If you still intend to use the stop grabbers on the 4-hour time frame, probably you are a scalper, and you probably should trade on the very low time frame, such as the 5-minute charts, 50-minute chart, because you will have to place a really tight stop, because in the opposite way, conversely, your stop will be too far, and risk reward ratio will be not quite acceptable for a current position. So that's all that I would like to discuss with you today. Well, I hope that tomorrow we will get some more clear signs from the market, and finally we'll get some direction, where some more hints on the potential development here.